The Housing Investment Trust is a fixed income fund specializing in multifamily mortgage-backed securities. Now, in addition to our investment objectives, we also have a mission to create jobs by providing our capital to fund new housing projects throughout the country. We've had an incredible run in terms of our performance. We've been able to outperform the benchmark,
which is the Barclays Aggregate Bond Index, on a gross basis for 18 consecutive years.
Now, we achieve our success and we build our strategy based on our specialization in multifamily mortgage-backed securities. These securities have government guarantee credit enhancements, so the investments are very safe in terms of credit quality. These investments also provide higher income versus comparable securities that are in the fixed income markets. And also very important to managing any fixed income portfolio is managing interest rate risk. And we can do this with our multifamily securities because they have prepayment protection, which is very important when rates go up or down significantly in a short time period. Now, overall, our strategy has been pretty consistent for the past 20 years or so. We substitute multifamily mortgage-backed securities for treasuries and corporate bonds, which are typically in most other fixed income products. Now, the benefit of multifamily mortgage-backed securities go beyond its high credit quality and higher income. It also provides great diversification versus other instruments or other asset categories that most pension funds invest in. These assets typically perform better when the economy is weak, when the equity markets are in negative territory. People usually have a flight to safety type of reaction when there's something negative in the news.
So if you look back since the end of 1999, the HIT has actually generated a return of around 100%, while some domestic and foreign equity markets have generated negative or flat returns. If you look at the S&P is actually in negative territory, around negative 10%.
So even though the S&P isn't our benchmark, it's really important to emphasize that a high credit quality fixed income fund provides important diversification for investors that have a long time horizon. Finally, I don't think there's been a better time to invest in the HIT. That's because right now we're in a time period of high levels of uncertainty. There's a lot of risk in the markets. The lack of jobs, job opportunities. I believe the HIT absolutely is positioned well in terms of its investment performance going forward. Inflation's low, and I do think that having the benefit of high credit quality in a portfolio will come into play for the next several years. But we also have an initiative to create jobs, and that's really consistent with our ongoing mission. But more than ever, we need to create jobs, especially in the construction sectors. And we're seeing more opportunities right now than we ever have to create these jobs.
The average annual total net returns of the Housing Investment Trust for the 1, 3, 5, and 10-year periods ending April 30th, 2011 were 5.28%, 6.15%, 6.35%, and 5.87%. The trust outperformed its benchmark, the Barclays Capital Aggregate Bond Index, for the 1, 3, 5, and 10-year periods on a gross basis by 38, 80, 47, and 55 basis points. Past performance is no guarantee of future results. Economic and market conditions change and will cause investment return, principal value, and yield to fluctuate so that a participant's units, when redeemed, may be worth more or less than their original cost. Current performance may be higher or lower than that cited. Performance data current to the most recent month end is available on the Trust website, www.aflcio-hit.com. Gross performance figures cited do not reflect the deduction of trust expenses. Net performance figures do include this deduction and represent the returns investors experienced during the applicable period. Information about trust expenses can be found on page 1 of the Trust's current prospectus. Investors considering investing in the Trust should carefully review the Trust prospectus that sets out its investment objectives and strategy, as well as the associated risks, charges, and expenses before investing. The prospectus can be found on the Trust website, www.aflcio-hit.com, or can be requested by calling 202-331-8055.